Let's hit some retail stocks on the move here this morning, starting with Lowe. Shares are lower despite beating earnings. I spoke to CEO Marvin Ellison. I asked him if there's a preferred interest rate that these deferred home projects start to get done. He said, we're going to have to see mortgage rates start to correlate more with the Fed action. We think that we're going to get to a new normal when it comes to rates, and I think that obviously we just haven't gotten there yet. Very interesting stuff there. And then we talked a little bit about tariffs, and he said, look, we have about 40% of our goods sourced outside the United States, not specifically China. Yep. He said, we've been here before. We've been doing this now for 7 years. The next administration, the Biden administration, did not roll back those tariffs. We are in the process of sort of playing out some game theory to look at different strategies of what we might need to roll out should these potential tariffs come into play. So sort of a lot of moving parts here, but generally the quarter was slightly better than expected. I mean, Jason, you own Lowe's. What do you make of the report?
Yeah, so I mean, the stock's still up around 18% year over year. Well, for the year to date, I'm sorry. And, to your point, it's beat on the top and the bottom line. I think when we talk about mortgage rates, and I think the important thing to always know, directionally, we know where the Fed is going, but, the mortgage rates are closely tethered to the 10-year. Mm-hmm. And obviously, we've seen some strength in the 10-year, and that's why rates haven't come down as much as the consumer might have expected. I think there's also been some softness in the big ticket items, which I think is a concern. But the reason why I continue to like Lowe's, they continue to grow market share in the pro segment, which is typically not where they've always been. And I think Marvin Ellison has just done a great job of just spearheading that initiative. So I continue to like this one. I'm holding out. I think rates will eventually move lower, and I think you'll start to see some more activity on the DIY side.
Stephanie, you own Home Depot. Obviously, this is the one that seems more over-indexed when it comes to the pros.
Yeah.
But seeing similar things macroeconomically as what Lowe said, both the CFO of Home Depot, Richard McPhail, and also Marvin Ellison at Lowe's said that they both agree that we think that it can't get much worse when it comes to housing turnover. It's got to inflect from here. And most of their shoppers are homeowners, but they just don't want to be moving around when rates are still these elevated.
I mean, I thought Lowe's was fine, right? And I thought in terms of the guide higher, we'll get to Home Depot in a sec, but the guide higher, I just think that that's where the sell side was and the buy side was already at, right? They didn't really blow it away. So, yeah, they're kind of biding their time. They're doing the best that they can in terms of profitability. I would say the same thing for Home Depot. And the fact that sales have outperformed inventories by 2 points for 6 consecutive quarters at Home Depot, that to me is why I'm excited, because that helps the margin story. And we have to just wait for the top lines to come through so that we can get positive operating leverage. But I also think it goes back to the mix, because you mentioned DIY. That's 70% of Lowe's mix, and Pro is 30%. And we know DIY is struggling more than Pro. And Home Depot did a little bit better because they're 50-50, to your point, right, in terms of, and that is. And why I'm excited about that is because they just made an acquisition. Home Depot made an acquisition of SRS, and that actually is the reason they got to 50% of their mix being pro. And I think they're going to continue to grow that business. Even if it's margin dilutive, I would much prefer them being in the right areas, the strong areas. So I think it's just a matter of time. This is one of my favorite stocks for the year. It's done pretty well.
Yeah. For sure.
Stephanie, we're going to hear from Target tomorrow morning. They come out with results. You own this one.
I'm bracing myself.
Why?
I looked at the last 6 quarters of this company. 4 times they missed, 1 time they beat, and 1 time they came in line. So they've been very inconsistent. That's not to say that I don't think what they're doing isn't working. I think it is working. They've done a lot of, you know this better than I, because you look at the stores and you talk to the management team all the time, but they are doing the right things in getting the right products in the stores, right? They're doing better in execution. They're doing better in inventory management. So I think we are going to continue to see progress in margins, operating margins. They did 6.4% last quarter. If they can do that again, and they can see kind of low single-digit same-store sales, I mean, you're looking at a company that could deliver $11 in earnings power in the next year, which is why I like it. And if you look at the multiple spread from Target to Walmart, it's the widest it's ever been in history. It's at 15 times versus Walmart at 34 times. Not to say that Walmart doesn't deserve it because of the execution and the strength and the size and the scale at Walmart, but I do think that Target can play catch up, and they're doing a lot of internal self-help things to get them in a better spot.
I was just going to ask quickly before we move on about if there's anything from Walmart that you can correlate to Target, even though they have kind of been diverging diverging in a lot of areas, and Walmart has been so consistent, and Target has been a bit inconsistent.
Yeah, I think Walmart just had a better product set, and they figured out their inventory management way quicker than Target did. It took Target a really long time to right-size their inventory. I think they're there, but it's taking them a while.
Yeah, there was that inventory misstep for a while there around the pandemic.